Sabook, your shortcut to knowledge in minutes.
Welcome back to the channel, where we explore strategies for informed living, professional advancement, and meaningful connections. Today, we examine How to Make Money in Stocks by William J. O'Neill, a seminal work on disciplined investing that equips readers with tools to identify high-potential stocks and mitigate risks. Let us proceed. William J. O'Neill, founder of Investor's Business Daily and a pioneering investor, authored this enduring guide in 1988, updated through multiple editions to reflect evolving markets. Drawing from decades of market analysis and historical data, O'Neill introduces the CANSLIM strategy, a systematic approach to selecting growth stocks based on 7 criteria. The book emphasizes empirical evidence over speculation, combining fundamental analysis with technical patterns to achieve consistent returns. Its structure includes an overview of market cycles, detailed explanations of CANSLIM, chart pattern recognition, and risk management principles. We shall review the core framework, highlight essential components with examples, and outline precise applications for contemporary investors. The CANSLIM methodology serves as the foundation, representing 7 factors for stock selection. C. Current quarterly earnings. O'Neill stresses that accelerating earnings signal robust company health. Seek stocks with at least 25% year-over-year growth in the latest quarter. For instance, early identification of such metrics in companies like Amazon during its expansion phase could have yielded substantial gains. Application: review quarterly reports via tools like Investor's Business Daily. Prioritize stocks exceeding 25% earnings growth. A. Annual earnings increases. Consistent yearly gains, ideally 25% or more over 3 to 5 years, indicate sustained momentum. O'Neill cites historical winners like Home Depot, which demonstrated this pattern before its meteoric rise. Application: screen for companies with rising sales and return on equity above 17%. Avoid those with declining trends. C. New products, management, or price highs. Breakthrough innovations or leadership changes often propel stocks to new highs, creating buying opportunities. Example: Apple's iPhone launch drove shares to record levels, rewarding early CANSLIM adherents. Application: monitor news for catalysts, enter positions when volume surges on new highs. Supply and demand. Limited share supply amid rising demand fuels price appreciation. Focus on stocks with institutional accumulation but not excessive float. Application: use volume analysis to confirm demand. Target stocks with shares outstanding under 50 million. Leader or laggard. Invest in market leaders, stocks outperforming peers by 20 to 50% in relative strength. O'Neill references laggards like fading retailers, contrasting them with leaders such as Tesla in its growth era. Application: rank stocks by relative strength index, select top performers in leading industries. Institutional sponsorship. Institutions drive 70% of volume. Follow their buying patterns for confirmation. Example: early institutional interest in Netflix preceded its streaming dominance. Application: track 13F filings, buy when sponsorship increases without overcrowding. Market direction. Align trades with the broader trend. 80% of stocks follow the market. O'Neill advises using indices like the S&P 500 for timing. Application: confirm uptrends with moving averages. Avoid buying in confirmed downtrends. O'Neill further emphasizes chart patterns such as the cup with handle formation, a consolidation signaling breakouts, and risk management, advocating 7 to 8% stop losses to preserve capital. Historical analysis reveals that following CANSLIM has outperformed the market, with O'Neill's model yielding average annual returns exceeding 20% in tested periods. To implement, maintain a watch list of 10 to 20 candidates using free screeners. Allocate no more than 20% of capital per position. Review weekly. In summary, How to Make Money in Stocks provides a rigorous, data-driven framework for equity investing, prioritizing growth stocks amid favorable conditions. O'Neill demonstrates that disciplined application of CANSLIM fosters superior outcomes over speculative approaches. Should this analysis prove valuable, please like, subscribe, and activate notifications for further insights. Thank you for your attention. We shall reconvene in the next presentation.